Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is your weekend edition for Friday, the 8th of February, 2019. And it's been an interesting week. You know, we're watching world economies slow down. We're watching the dollar reign supreme over a number of currencies. You get to see that right through here. We still have a Brexit situation that nobody's been able to figure out, regardless of what goes on. And we're getting some weakness in the stock market after this monster vertical rally. This is going to be the first losing week in a long time, in fact, in stocks. At the same time, the gold is up nicely. Silver is up beautifully, holding on to some key numbers. And copper, even with the U.S., China not doing a deal, and while it's down today, still a market trading in the 280s. The palladium market continues to run to the upside, and that is fascinating as can be. So let's take a look, if we could, first at a monthly chart. Any way I cut it on the monthly chart, I still have a pattern of lower highs and a lower low. We need to get through this area of resistance or get a chart pattern that can not take out last week's high, and that's going to be the key if it's not going to just burst through it, and that's $13.2540, about $12–13 higher. But in the meantime, the bias is up. The swing line's got the lower highs, lower lows, and momentum's up. Everything is diverging. What else? What's pretty evident to you, and it should be just looking at it, the sideways action in the market. Sideways action resolves itself. It doesn't stay sideways, not indefinitely. And you're either going to break out to the downside or the upside. So the longer that this has gone on, and it has gone on through literally 2016, 17, and into the beginning of this year, if the market's going to come alive, it will surprise people the way that it does so. When we look at the weekly area chart, this is where you see the action. The monthly, you're not seeing this. You see that the market came from 1161 up here on the different months. You can see the power of this on the weekly chart as the market on a closing basis, not highs and lows. And this chart is using highs and lows of those months. Has come all the way up, and for the week, you're down $3. Okay, not a big deal. When you look at the chart, you get to see how the market has come up. We have what's called an inside week. We didn't take out the prior week's high or low. The pattern of the chart has been classic in the sense of higher lows and higher highs. That's bullish. Even if you break down on this chart, you'd have to take out under the current chart formation 1275.30 to do it damage. What about support? Well, you can see that the 18-week average of closes has moved over the 200-week. Now in its sights for the long-term bulls, the word is bulls, you have to get this number getting over the 100-week. Then you're going to say that the chart's all lit up bullishness, but by then, to do that, you're probably going to be at higher levels. That doesn't mean you don't come up here and you sort of drift around. And we began this week with a slight drift. When we look at Bollinger Bands, we can see that at this point, you had one surge over the bands, tried to hit it again, and you've backed off from it. So the resistance from this is shown itself, and support might be the 100-week average on a reasonable break in the market, but momentum isn't backing off. So even though it's a down week, didn't do any damage as I see it to the chart at all. Market's still on this chart, very much in the bull camp. When I look at the gold-silver ratio on a weekly basis, you came from 86.58 to 81.45, and you're drifting around this 8,300 level. If you break through right in this area here, let's call it the 82.5 zone, keep your eye out it, because silver probably starts gaining then on the silver market with more of a gusto to it. As we look at GLD, what I can say is certainly the market's run to the upside. That's number one. Momentum is carried today, not necessarily the chart pattern, because you had made this lower low and a higher high. That doesn't stop the fact that it's running the upper Bollinger Band and acting good. The futures market weekly chart has a better look than the GLD does. GDX is the prettiest of this group. It's got the higher lows, the higher highs. It runs to the upper band, gets over, backs off. Right now, I don't know where it'll finish this week. We're at 22.43, 5 cents over the upper Bollinger Band. No way for me to know as I'm recording this for you, which is about 2 o'clock, what it'll do in the next hour, but it doesn't matter. That's why I'm doing it. You'd have to fall all the way under these areas to do any damage, 2022, and that's very, very far away. That's 10% drop in the market. I don't see that right now. What was resistance, potentially the 100-week average, could become support here. So it's between the upper Bollinger Band resisting it and the support at the 100-day in the market. The silver market has a bullish chart. Higher lows, higher highs. Got up to a key number here, and this was last week when it got over the upper Bollinger Band, went to the 100-day average, and it's backed off. Backing off doesn't change the trend. The trend is up, and what you want to see is a nice jump in the weeklies. Now, the weeklies have been moving about 7 cents, 6 to 7 cents at a shot. It still won't be over next week, this last break low of 15.19 and a half. In the copper, understand where the resistance is, and it's easy. Look what you ran up to. I teach this so often. The first challenge on the lower side or the upper side of a Bollinger Band is often where the pros step out of some of their positions. You go back, do your work. That doesn't mean you can't hit it and then move on with the trend. It's the first hit of it, and you go back and you look at it yourself, especially on these weekly charts, and you get a feel. So looking for the resistance up there, fine. But this is still a bullish market. Support's back at 274 and a quarter. You still have the higher lows, higher highs, and it's taken a hit. It's taken a hit that Presidents Trump and Xi aren't yet meeting, or that the idea is, the prod is that there's no meeting. You know, at the last minute they could meet if there were a breakthrough through this coming week with Secretary of Treasury Mnuchin and Robert Lighthizer, our head negotiator, meeting their counterparts in China. What if suddenly there's a breakthrough? Copper is anticipating that to a degree. In the platinum market, you have a pattern of higher lows, higher highs, but you settled under the 18-week average. The market went neutral. The powerhouse is right here, the palladium market, and I know I'm a broken record on it, and I've said numerous times the strongest of the metals, and I will stand behind what I've said. It's given me no reason to back off of that in any manner. Then we get to the dollar index, which this week, I admit I was surprised when the market took out 96.37 and a half, and if it settles the way it is right now, the last quotes, it's gone back into an uptrend. Higher lows, higher high, and the settlement over that number. So all the traders that were thinking this is the year of the weak dollar, I don't know that they're wrong. It's only February 8th, but so far, with the euro at 113.60, the pound having the Brexit issues, the Swissy not wanting to get away, if you will, from the what the euro does, then Australian dollar with the Reserve Bank of Australia. You know, I said the Royal Bank on Bloomberg this morning. I wasn't right. It's the Reserve Bank of Australia, and I thank our friend that told me that. I'm so used to British control. But in any case, still bullish as I see that chart. So we look at it all, corrections in the stock market, and where do you go with it? Well, we'll write about that this week with our Linn research. Now, let me tell you what we do with our research because it's important. On our research, what you're going to find out, we cover all aspects of the market. So it's the stock indices, it's the currencies, we list them as financials, and you get into all these different parts because there's counterplay in them all. You certainly are looking at what the dollar does to see what other markets do, and suddenly the gold is reigning supreme because what are you going to do, invest in a Bund? I don't think so. And, you know, there's not a lot of rush to the U.S. to invest in our 10-year notes. You'll say why? Because if you hedge your currency, it's a negative return. Yeah, it gets to be strange, but we write about that. And that's where we give you what you need. You might also want to sign up for my own research at that time so you can see what I offer my clients in addition to our group's research. Go to our website, click on here, and away you go. You can always do it up here. Click there. It'll take you to our main page and sign up for what you need. I'm Ira Epstein. Have a great day.